Billion-dollar market cap. It's lost over a third of its value since. What's behind this drop, and can the company regain its spark? We'll debate that. And a bank breakout. Financial stocks at all-time or multi-year highs as their CEOs head to the White House. Can the gains keep coming? Plus, Cisco on the move after earnings. Sneaker maker On Holding sprints higher, and charting the course on Disney, where the entertainment giant is heading as it gets ready to report tomorrow morning. I'm Melissa Lee, coming to you live from Studio B at the NASDAQ. On the desk tonight, Carter Worth, Karen Feinerman, Guy Adami, whose phone just rang, and Julie Beal. Ironic, since he's always the one who says phones off. But we start off with what may be the shattering of Oracle's crystal ball. The one-time AI data center darling falling another 4% today, now trading at more than 2-month lows. It's more than erased that 35% post-earnings pop from September and is now pacing for a fifth straight week of losses. The move coming as investors seem to be increasingly questioning the pace and magnitude of the AI boom. Mega-cap names like Meta, Amazon, and Alphabet all taking an outsized hit today, while Palantir, one of the best-performing stocks of the year, dropped 3.5%. So what should we be taking from this pullback, Oracle's in particular? We've been talking about it for a while, but I guess the bigger question is this decline a cautionary tale for the rest of the space?
I believe it is. If Dan were here, Dan's been talking about it for a while. I think collectively we've been talking about, it's a cash flow problem at a certain point, and you have to wonder. Now, Michael Burry's been writing about it as well, and I went back and looked at all the Twitters and the videos back in September 10th, September 11th, and people were tripping over themselves to say how bullish it was for Oracle and how this would be the next $1.5 trillion, $2 trillion company. And we sort of looked at each other and said, you know what, there's a lot to be gleaned from this in terms of what's the earnings going to be on the back of the revenue that they're talking about. Now you're talking about a cash flow problem. We've retraced the entire thing, as you said. This is the September low, and it remains to be seen if the stock can bounce from here. This is a logical place for it to bounce, but the bloom is off the rose here, Mills.
They have increased their debt by $38 billion since September alone. Mm-hmm. I mean, that is a massive build, and it's still coming. I mean, the whole space, they've already pledged that they're going to increase spending next year. That is going to be funded by debt primarily.
Yeah, so they don't have the cash flow problem at the moment. Mm-hmm. That's not where they are. But when they talked about that enormous backlog build, the margins on that backlog were much smaller. Mm-hmm. And now they're likely to have higher interest expense, right, for two reasons. One, just the magnitude of how much debt they want to sell, and others as well, so that market could get saturated. And then some concerns about, okay, well, what is the promise of this data center return? And so do we debt holders need more interest?
Right.
So you can see how you get into this sort of negative spiral there. I don't know how much of it to make is just a little bit of like a frenzy right now. My gut is that it's more structural than that. It is a bigger problem. Even while we're talking about this just today, right, we saw huge deals. It's almost like a race to just get your headline number out there. I don't know if that's to get a position in line for debt. I'm not quite sure what that is. But when you look at Meta's response, the stock's response to that build, that's, as a shareholder, very, very frustrating. I think if we were to see the year of efficiency next year, I know that's not Mark Zuckerberg's plan at all.
Right.
But that would be very nice for the stock.
2.0 would be probably pretty good. What does that chart look like, Oracle, the decline?
I mean, we can talk about the chart for a second, but I think the real thing is, if one were sitting there and they were just graduating with their PhD in finance and they had to present themselves in front of the committee, and the committee said, well, you've made an analysis on Oracle. And they said, yes. Did you use a dividend discount model? Did you use enterprise value EBITDA? Did you price the sales? Some of the parts. How does anyone explain, myself included, how a stock can go from 250 to 350 back to 250 in a matter of weeks? Is anything changed? The debt's not new. The story's not new. Just because it's in the news, there might be some issue with margins. They're overstating this. But this speaks to the vagaries of markets. These are risk assets, right? Now the question is, but here, and to your question, do you buy this 35% sell-off? My hunch is that just as it was in favor, now it's so almost out of favor that I think you can play it for a bounce.
Oh, so bad it's good in this case.
Well, it's an extreme move. You've retraced the whole thing. And again, that's a trading judgment. I can't speak to it, and I would never want to, because clearly no one else can, what this thing's worth, right? No one has a clue.
Yeah. Julie, what's your take on this? And if we can put up the chart that shows the decline in valuations. I mean, Oracle's valuation is down 30% from its peak of 45 times. It's 32 right now. I don't know if you think that is worth a play for the bounce, as Carter says.
It still feels a little bit rich for me relative to what we can see is that there's just a precipitous decline in the returns on investment that people can expect. Everyone can kind of recognize that Oracle is not the same type of business as a lean software business. What I think really has changed and has impacted all of these players is just this transition away from we're going to fund this with cash flows, which everyone felt fine. But suddenly when we're talking about debt, and we're doing secret debt with special purpose vehicles, like what happened with Meta, I think suddenly that really, really changes the dialogue. And then it gets only a little bit worse when you have OpenAI CFO asking for a backstop on their debt, like asking your dad to co-sign your loan on your first condo. Like, that's just not how this works. And I just think that that has really spooked the market because we can all recognize that the minute debt gets involved, that accelerates the declines if they happen.